Hello everyone, welcome to the 27th of October weekly market updates on Technical Insights. This Monday morning, Asian markets traded sharply higher after top US and Chinese trade negotiator trashed out a framework on several disputed issues, paving the way for a President Trump and President Xi meeting later this week to sign off on the terms. US Treasury Secretary Scott Bessent said in an interview on Sunday that Trump proposed 100% tariffs on Chinese imports are effectively off the table. He added that China is expected to make significant soybean purchases and to delay the broad restriction on rare earth exports. The US, however, will maintain its current export controls on China. On that note, the Japan Nikkei 225 index jumped by more than 2% and the China CSI 300 rose more than 1%. Hang Seng Index also rose by almost 1% as well. Japan Nikkei 225 index also breached the 50,000 mark for the first time ever today as investors cheered the progress of US-China trade talks and the strong momentum from Wall Street last week. Over in the US, all three major indices hit new all-time record close as slightly lower inflation data spurred optimism that the US Fed can stay on its rate-cutting path, boosting the US economy and justifying higher valuations for equities. A trade deal for US and China would be a big boost to tech stocks, contributing to a broader bull run in the equities market, which will be a huge groundbreaking moment for the tech sector. The Dow rose 1.01% on Friday and 2.2% for the trading week, securing its first close above the 47,000 level. The S&P 500 also added 0.79% on Friday and ended the week up 1.9% as corporate earnings continue to surprise the market analyst expectations. Tech-heavy Nasdaq Composite Index, with the most to gain from the de-escalating trade tensions, climbed 1.15% on Friday and closed the week higher by 2.3%. Investors are now looking ahead to the widely expected interest rate cut by the US Fed later this week, with a raft of big tech earnings from Microsoft, Facebook Meta Platform, Alphabet, Google's, Amazon, and Apple, who will release their third quarter results this week as well. And if earlier Q3 reports are of any indication, these tech companies could post stronger than expected financial results, pushing major US indices another leg higher. Back to Singapore, our STI index bounced back above the 4,400 level last week after hitting a high of 4,443 points on Friday before closing slightly lower at 4,422 points. For the trading week, the STI is up about 2.2%. We saw a series of Indonesian SDRs being launched by SGX last Thursday, including names like Bank Central Asia, Indofood, and Telkom Indonesia. Bank Central Asia, or BCA, is one of the largest private banks in Indonesia, and Indofood may be a name that everyone is familiar with, especially if you like their mee goreng instant noodles, while Telkom Indonesia is the largest telecom over there. But what was leading our STI index higher for the trading week was YangZiJiang Shipbuilding, which was up 9.1% for the trading week, with ST Engineering up 5.9% and Citron rounding up the top three at 5.8%. No doubt the improving trade tension or trade relation between US and China helped YangZiJiang Shipbuilding rebounded tremendously last week. So for this week's technical analysis, let's take a look at YangZiJiang Shipbuilding. This Monday morning, YangZiJiang Shipbuilding share price jumped another 2.6% to reach a new year-to-date high at $3.58 after last week's 9.1% gain. The previous time that we covered YangZiJiang Shipbuilding was on the 29th of September video over here. In the previous analysis, we noted that YangZiJiang Shipbuilding share price was impacted by the termination of a US $180 million contract with an unknown party due to alleged circumvention of the US sanction. YangZiJiang Shipbuilding share price dropped sharply that day from $3.26 at the open to about $3.06 in early trading. But the share price rebounded strongly the next day to $3.37. We noted that YangZiJiang Shipbuilding profit margin still looks very solid, with most analysts saying that the margins are likely to expand steadily into the 2025 and onwards, driven mainly by gradual execution of more profitable orders, aided by a potential pickup in new building of dry bulk carriers and tankers. More recently, in early October over here, the increase in trade tension between US and China also caused YangZiJiang Shipbuilding share price to plunge about 10% from 8th of October to the 14th of October. With this morning latest update that US and China are likely to agree on a trade deal later this week, YangZiJiang Shipbuilding share price has recovered all of October losses and hit a new year-to-date high at $3.58. With no near-term resistance to reference, the next resistance for YangZiJiang share price will be the psychological $4 handle. On the support side, investors may continue to use the 20 days moving average in green or the 50 days moving average in blue as key support levels, now at $3.34 and $3.19 respectively. Looking at the indicators, the MACD has now turned positive today, indicating that this may be a start of a new uptrend. The RSI now at 66 points is also signaling very healthy uptrend momentum, coinciding with what the MACD is saying, indicating that the uptrend that we observed since the April period this year is likely to continue towards the end of the year. DBS HSBC have a target price of $3.80, while Daiwa Capital have a target price of $3.90 for YangZiJiang Shipbuilding. So investors looking at YangZiJiang Shipbuilding may accumulate the shares on pullback towards the 20 days and the 50 days moving average for a margin of safety, targeting the $3.80 or the $3.90 level projected by the analysts. And these are the updates that we have this week. If you do find the information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insight.